It all turned out to be a complete non-event. Not only did the Reserve Bank do nothing, as expected, the market odds for the December meeting is unchanged at 6%, so not much chance of anything. And for the next June, it's come back from an 80% chance of a cut to 74%. Now, the RBA's updated forecast for the cash rate at the end of 2026 is 3.3%, so one more cut. But that's not its own forecast, it just bases that on what the market is saying. And anyway, it all depends on what happens to inflation, and nobody knows that. After all, neither the RBA nor the market expected inflation in the September quarter to pop up to the top of the 2 to 3% target range, which led to the near certainty of a rate cut today turning into the absolute certainty of no change. And here's why the stakes are so high. The capacity to pay for a house has improved with this year's rate cuts, but it's still about $300,000 less than the actual price of houses, having been falling behind house prices since 2000. Now, you might be wondering, well, if that's the case, how come anyone can afford a house at all? And the answer is that the chart refers to a single wage earner, and the days of buying a house on one salary are long gone. The Aussie dollar is now a bit lower at 65.3 US cents, and the share market is down almost 1%, mainly because of quite chunky falls by the big mining companies, which have nothing to do with Australian interest rates, and smaller ones by retailers and banks. The US market moved a bit higher, and the Australian data centre business that's listed in the US instead of here, Iron Energy, jumped 11.5% on news that it signed a $15 billion deal for 5 years with Microsoft for access to NVIDIA chips. Now, the Roberts brothers, Dan and William from Sydney, started the company in 2018 as a Bitcoin miner before pivoting to artificial intelligence, which turned out to be very intelligent. They're now worth $1.5 billion each. And that's finance.